Friday afternoon, the silver market goes quiet. For the next 41 hours, futures trading essentially disappears, but the world doesn't stop moving. Governments release emergency statements, currencies swing, military tensions escalate, central banks make surprise decisions, physical silver keeps changing hands across Asia and Europe. Then Sunday night arrives at exactly 6 p.m. Eastern. Silver futures reopen, and sometimes the price jumps violently within seconds. No warning, no gradual movement, just an instant gap higher or lower. And most retail traders never see it coming. Welcome back to the channel. Today we're breaking down one of the most dangerous structural risks in the silver market, the weekend gap. Not technical analysis, not inflation data, not Fed speculation. This is something deeper. Because while most investors are watching charts during the week, institutional desks are preparing for what can happen when markets are closed. And in the current global environment, that risk may be larger than it has been in years. Why silver can explode on Sunday night. Silver trades globally through several major exchanges: New York COMEX, Shanghai Futures Exchange, Tokyo Commodity Exchange, London OTC markets. But COMEX futures remain the main benchmark for global silver pricing. Here's the problem: COMEX shuts down Friday afternoon and doesn't fully reopen until Sunday evening. That creates a massive window where real-world events continue happening while the primary pricing mechanism is offline. During those 41 hours, physical silver demand still changes. Asian markets remain active. Currency markets keep trading. Geopolitical tensions can escalate instantly. When futures reopen, silver has to catch up all at once. That's how gaps happen. One moment, silver closes at a certain price Friday. The next moment, it reopens 3%, 5%, sometimes even more away from that level with almost no trading in between. And if you're using leverage, your stop loss may not protect you the way you think. The current environment makes this risk worse. Right now, the global system is unusually unstable. We're seeing rising geopolitical tensions, fragmented central bank policies, currency volatility, supply chain pressure, growing divergence between physical and paper silver markets. Any one of these can trigger aggressive moves, but when several happen together over a weekend, silver can react violently at Sunday open. History already shows this pattern during major geopolitical or currency shocks. Gold and silver often gap sharply when markets reopen because traders had no opportunity to react in real time. And today's environment may be even more fragile than many of those past periods. The physical silver market never sleeps. This is the part many retail traders overlook. Even while COMEX is closed, physical silver trading continues in Asia. Bullion dealers stay active. Refineries keep operating. Shanghai pricing continues moving. Sometimes Shanghai silver trades at a premium while COMEX is offline. That creates pressure. When COMEX reopens Sunday night, futures prices often rush to align with what already happened in physical markets overseas. If physical demand surged during the weekend, silver may gap higher immediately. If the dollar strengthened aggressively, silver could gap lower just as fast. The adjustment happens instantly. Thin liquidity makes the move more violent Sunday night. Trading is very different from normal New York hours. Volume is lower. Fewer traders are active. Order books are thinner. That means even relatively small buy or sell orders can move price dramatically. And once stop losses begin triggering, volatility can accelerate fast. This is why some of the sharpest silver moves happen during low liquidity sessions, not during the busiest hours. The market may appear stable during the week, but Sunday night is a completely different environment. Why institutional traders handle this better? Large institutions operate around the clock. They monitor Asian market activity, currency movements, physical demand, weekend geopolitical headlines, central bank announcements. Retail traders usually don't. That creates an information gap. Institutional desks are often prepared before futures reopen, while many retail traders only discover the move after the gap already happened. This isn't conspiracy. It's simply how global markets function. What smart silver investors watch before the weekend? Here are some of the key signals experienced. Traders monitor before Friday close. 1. Major weekend event central bank meetings. Elections, trade negotiations, geopolitical tensions all can trigger volatility. 2. Shanghai silver pricing. If Shanghai silver moves sharply while COMEX is closed, futures may adjust aggressively Sunday night. 3. Dollar strength. US dollar trades continuously through forex markets. Strong dollar moves often pressure silver prices. 4. Breaking headlines. Soon expect military events, sanctions, or policy surprises can instantly change market sentiment. 5. Open interest level. Shivi leverage in futures markets increases the chance of cascading liquidations during a gap when multiple signals align at once. Weekend gap risk rises significantly. The real lesson: biggest danger isn't necessarily being wrong about silver long term. It's being positioned in a way that can't survive short term volatility. Many traders who got wiped out during previous gap events were actually correct on the broader trend. They simply couldn't survive the sudden move. That's why many experienced investors focus less on predicting every short-term swing and more on structuring positions that can withstand unexpected volatility. Final thoughts: weak gap risk in silver is real. It exists every single week, whether most traders notice it or not. And with geopolitical uncertainty, central bank divergence, currency instability, and fragile liquidity all happening at the same time, the probability of aggressive Sunday night moves may be increasing. The traders who understand this risk prepare before the market closes. Everyone else reacts after the gap already happened. So here's the question: if silver opened Sunday night 5% away from Friday's close, would your current position survive it? If you enjoyed this breakdown, make sure to subscribe, leave a comment, and share the video with anyone trading leveraged silver positions, because when the next major gap arrives, it will happen fast.